How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. I am super excited today because I have an interview that I've been waiting on for a little while now, but I have Chad Hall, who's an investment banker that I've brought in to basically talk to us a little bit about investment banking. So hopefully for anybody who doesn't know anything about investment banking, this might be a little educational for you today, but even for people that do, hopefully we're going to talk a little bit about the current bank M&A market, and hopefully people will get some good tidbits from that. But with that, I'm going to bring Chad in. Chad, how are you doing today?
I'm doing great, Joe. Thank you for having me.
Yeah, thank you so much for coming on. So just, some general questions and stuff for you here today as we get into our topics. But I figured I'd start off with an easy one. So can you just tell us a little bit about your job and what you do at Janney?
Sure, Joe. So my job, my role at Janney is I reside in the capital markets group. A capital markets business of Janney would entail research, trading, and investment banking primarily. And I operate my business within the investment banking business, and I work with depositories. Depositories being banks. I'm the head of the depositories group, and I work with primarily community and regional banks, assisting them with my colleagues on a number of strategic initiatives, growth initiatives generally around mergers and acquisitions and capital raising and related activities.
Nice. Very good. Now, just out of curiosity, do you have kind of a geographic area that you cover?
So our firm covers, or our practice, should I say, and our firm, we cover the entire country in the depository business. My area of focus is generally the Mid-Atlantic region. So sort of everyone has a different definition of that, but New York, Pennsylvania, New Jersey, Maryland, a little bit into Virginia. So that would be sort of the general area.
Gotcha. Okay. So let me ask you this. Can you tell us a little bit, before we get too far into our topics, can you tell us a little bit about Janney? Like what, maybe a little bit of the history or background on Janney?
Sure. So Janney is been around a long time, founded in 1832. It is owned by Penn Mutual, which is a large mutual insurance company here in Philadelphia as well. The firm has about 2,200 employees, about 250 or so work in the capital markets area where I reside. We have about 150 offices scattered primarily, east of the Mississippi. And we're headquartered right here in downtown Philadelphia at 1717 Arch Street.
Nice. And I would just like to add for our audience that for anybody who's maybe not an East Coast person or maybe not as familiar with Janney, just as Chad said, Janney has been around for a very long time. They have an impeccable reputation in our kind of, I'll call it the Northeast corridor, Northeast area. Very highly respected, very highly thought of firm. Like Chad said, it's been around for a very long time. I would say just about every banker, at least over here on the East Coast, probably has an inkling or knows who Janney is. And so again, just to add a little context there for our audience. But now,
Joe, let me just interrupt. One thing that I probably didn't bring up, which is the real strength of the firm, is its retail practice. So as you would probably call it, retail. So we have roughly 850 brokers managing about $150 billion of assets of individuals within our area, and that's really the backbone of the business, and where it initiated from. So I focus on the capital markets area because that's where I spend my time, but I would be remiss if I didn't bring up where people may be most associated their relationship or knowledge of the firm if they're in this area. They very well may have seen a Janney office, which would be that part of the business.
Nice, very nice. No, and thank you for that context. That is definitely helpful. So let's if we can, let's talk a little bit about the kind of bank M&A market right now. Are there anything that you would like to point out, or any general comments or trends? I mean, I think that I've reported on in a lot of episodes here, a lot of, different things going on right now, whether it be like unrealized losses in bank bond portfolios, stock prices, technology, succession planning, kind of the whole gamut. But anything that, I guess in a general sense, anything that your thoughts on the current M&A state of M&A in banking?
Sure. Yeah. So, Joe, I've been working with banks on M&A over 25 years now. This environment is one of the more challenging environments for banks, for those that are pursuing mergers and acquisitions and/or capital. The industry, as many of your listeners may be aware, has hit some bumps in the road after the Fed raised rates from basically zero to 525 basis points in 15 months. So that velocity in the rate movement really put the banks a little bit on their heels in those areas of M&A and capital, because the implications on M&A is that it revalues a lot of the balance sheet, as it sounds like you've talked about in one of your prior podcasts. And when you put transactions together, you have to recognize those fair market values. And when the value of banks' assets are less, in theory, of when they booked them, that when you market, it runs through capital, and when you combine banks together, it creates a lower level of capital for the combined balance sheet for the combined company, and that's created a challenge. Banks are required to have certain capital levels from a regulatory perspective, and investors have certain thresholds that they like to see relative to the dilution that occurs to capital. So it's really been a challenging environment. We had the failures of March of last year that's created negative investor sentiment. So bank stock prices have been, up until last week, have been very challenged and trading at historic lows. Around 50% of general industry PE, if you look at relative values. So they don't have the pricing power. Banks use their stock for a lot of things, including mergers and acquisitions. And when it is lower valued, it makes paying higher prices that sellers are looking for that much more difficult to do. And so you have those two issues. And so when we look at mergers and acquisitions, for instance, you tend to see typically a couple hundred transactions a year, or put another way, about 5% of the industry consolidating. Last year we had around 100 transactions, and this year we're on pace to be maybe a little bit over that. So we're running at about 50% of the typical volumes of merger and acquisitions. And capital formation, because of some of the liquidity issues, because pricing has been so challenged, and because of some potential view that credit quality might be an issue down the road here, has made investors sour on bank stocks and bonds, and so it's been really hard to get them to want to invest in the sector in new issues of capital.
Let me ask you this. Do you think that as we get into the second half of the year here, obviously some people think that the Fed is going to, maybe have a rate reduction, it's not going to be, at least I don't perceive it to be anything major, maybe 25 basis points in either September or maybe October if they want to push it back a month. But, I don't know that even like a tiny rate cut is really going to be much to maybe move the needle or to, really jumpstart the bank M&A market. But do you have any thoughts on what we might see the second half of the year here? Do you think it might pick up a little or kind of stay the same?
So I think it will probably pick up a little bit. And, coming into this over the last few days, we've seen the investor sentiment change. The prospect of some Fed easing, maybe a change in the administration. So we've seen bank stocks appreciate quite a bit. A couple of days where they were 5% or plus up on each day, and so just that psychological view that things will be changing, I think, will help provide some upward movement in valuations for banks, and that's a big component of M&A. The other side, though, every rate counts. So we've been operating in an inverted yield curve, short rates are more expensive than long rates, and that's a hard way for banks to make money. And we've been at it for over 500 days, which is one of the longest terms or periods in banking, in modern banking history. So anything that could possibly point to that dynamic changing possibly, I think would be helpful. And then lastly, we talked about the fair market value issues. That also could be a byproduct. They're largely predicated perhaps on longer rates, but any rate adjustment could theoretically improve some of, or potentially lead to improvement in some of those economic deal-making challenges on the fair market value side.
Nice. And then, last question here on this, and then we'll kind of move on to some other things. But do you think in terms of bank sizes, like obviously there's been a lot of, you kind of alluded to a couple minutes ago about the bank failures last year with some of the larger regional banks. And obviously a lot of the focus has been on regional banks over the last year because of that. And you've got the whole, like what they call the Basel III endgame capital rules or proposed capital rules. Do you think there becomes a higher focus on mergers between some of those larger regional banks in maybe even over the next couple of years as we move forward, just in terms of them trying to stay within the capital ratios, maybe dealing with some other regulation or issues that might come down the road here? But I mean, I don't know, just any thoughts on that? It's as to whether there'd be, more emphasis on some of those larger regional players.
I do. I think the larger regionals are all ready to move on deals, but they're not going to go down that path till they have a sense that the regulatory environment will be accommodating for them to get to the finish line on transactions. So they're not going to pursue it until they see that the landscape has changed. There have been a lot of notable transactions. The larger the transactions, the lengthier regulatory approval has taken, and in a number of notable cases hasn't been granted at all. And so if they're going to be watching this election, watch what happens here. If there is a change, I think that you'll see that the tone change in DC, and I think you'll see some more movement with the larger regionals, so they can catch up to the biggest amount of money center banks. They're trying to. They would like to have a more level playing field, and they're not going to get there really any other way than through consolidation. That would be an expectation. And some of the other things you mentioned in terms of setting aside capital, some of the Basel III, again, it's still in the proposal stage, but dealing with some of that size and scale will be important.
Yeah, no, I absolutely agree with you on all that. I think that I've said before, one of the big things that banks hate is uncertainty. And you definitely have a lot of uncertainty in the market right now with the election, with, like I said, a lot of the proposed regulation and different things that are going on right now. And that uncertainty is always going to, cause issues there, as it were, when you're trying to, put M&A deals together. So I again, totally agree with everything you said, and great insight for the audience here. So, but all right, well, let's shift gears a little bit here. So I'd like to talk about you for just a couple of minutes. Can you maybe tell us a little bit about your career and how you ended up working for Janney?
Sure. So it's going back to ancient times here. I started in a credit department through a training program at one of the regionals that's no longer here. It was First Fidelity Bank on Broad Street. It's now part of the Wells Fargo organization, and it was a great opportunity. I had having been through school and paying to learn. Now I got paid to learn, and it was a very valuable resource for me. Taught me a lot about business in general, and then banking. And unfortunately, though, at the end of that, the bank was sort of in a sort of a strategic dilemma in terms of where it wanted to go, and ultimately, I elected to leave, and the bank was sold shortly thereafter. And I went to a private firm by the name of Berwind Financial, which was one of the larger privately owned businesses in the region, and they had a financial services business, which did investment banking and private equity. And they had an expertise in community banking, regional banking, M&A. And so I took what I learned from being in the bank to Berwind and leverage that to work with the skill set to work with community banks, help to grow their business. And was there for a number of years. The family decided to exit the business from a strategic standpoint and gave us the opportunity to take it to another firm. We went to a place called Benning and Scattergood, where I was for 20 years, and most recently ran their investment bank. And we continued that cornerstone of our practice with community banks, did a few other things as well, but spent a number of years there until the family decided to make an exit of their business, and Benning was sold to LPL Financial, who is not in the capital markets business. Gave us an opportunity to find a place for our team, and we had known Janney a long time, being in the city, and had the utmost respect for the organization there. And they were looking to grow their banking practice, their community banking practice, which they had made a big investment in 2019 when they acquired Fig Partners, and made it for an easy fit. And so I've been at Janney here for almost 2 years to the day, and it's been a great opportunity for everyone that came on board, and we're really excited about the future.
Nice, very nice. I think that's really cool that you started in banking, and that it sounded like you got a little bit of that kind of traditional bank training, kind of move it up through the ranks there a little bit, and you got the whole community bank experience before you went over to the investment side of the business. So I think that's really neat, man. I think that's really cool that you got that experience and you kind of went through that progression in your career.
Thank you. Yeah, it's unfortunate that there aren't as many of those training groups or programs as there used to be. Used to be a number of them, and they were really valuable. And it's sort of the byproduct of a lot of the consolidation, and that's been eliminated. And one of the biggest challenges for the banking industry is talent. Banking industry needs talent. Why do I have a job? Well, because there's a succession issue in banking. And when there's leadership changes, whether that's in the boardroom, whether it's in the C-suite or the boardroom or with shareholders, that often leads to a transaction. And so, the banking industry really could benefit from attracting more talent and, finding greater career avenues for folks that are interested in pursuing it.
Oh, no, I love that you said that, because again, that was kind of one of the reasons why I started this podcast, was to try to bring some awareness to the banking business, and hopefully I hopefully do a little bit of good by making this interesting, that people will hopefully some young people that are watching this, whether they be in high school or college, might spark some interest in maybe going into the banking business after they're done school. So thank you for mentioning that. I think it's a great point. And I myself came up in the banking business in what I viewed as a very traditional way. Like I started working in the branches when I was in college. And then after I graduated from college, I got hired as a credit analyst and went through a whole credit training program for 9 months, and then worked as a credit analyst for about 4.5, 5 years. Then moved on, became a junior lender, and then a regular lender, and then got additional training after I became a lender. So so again, and but that, the way that I came up, just as you described, Chad, that you see that less and less often, and I think that is an issue. And we could talk for hours about why I think some of those things have come to be in the banking business. But I would generally say that I think that the banking business needs to get back to, I think, some of those more traditional type of training programs, and kind of growing people a little bit more organically through the organization, so that they can do the succession and have that talent pool available to them. But like I said, I digress too. I don't want to go too off into the weeds there with that. But I definitely, very well said, and I definitely appreciate you stating that. So with that being said, I think it's a great segue. So would you, if any, would you have any advice for the young people out there right now that may be thinking about getting into the investment banking side of the business?
Uh, sure. I think if you've got an analytical mind and are curious about corporate finance, it's a great place to find your way to. Um, Also, what we do is not rocket science. I'll put it out there. Sometimes we like to pretend it is, but what we find it is it can be complex to those that don't have that background. So having the ability to sort of speak in layman's terms, as it relates to the the uh, the analysis that you're compiling, having that sort of multidimensional um, personality where you can not just do the math but also explain it, I think are really key attributes. And I think developing that skill through through college, or looking to get involved. There are analyst groups pools every year that come out on Wall Street. We have one here at Janney. Network, find your way. And there are also a lot of trade associations that you can look up and just attend. ACG is one that we always encourage. It's a Association for Corporate Growth. It doesn't really tell you much about banking, but it tells you a lot about investment banking. And you can just kind of go there and just listen in and take it and see if they're talking your language. See if you have an interest, and show up, network. That's a big part of it. You meet people, utilize, leverage relationships, alumni, if you have that opportunity. And, I like, because having a daughter that's going into her senior year, utilize the resources that are available to you, and don't be afraid of being a squeaky wheel. So make sure you kind of feel like it's for you, and then utilize the resources that are out there to pursue it.
Awesome. No, thank you. Okay, I've got my last two questions here for you, and I always ask these questions of every guest that comes on. So, do you have a favorite business book, and do you have a favorite business-related movie?
Oh, goodness. So it's probably cliche in both of these, right? But and probably been offered up by other guests. But I do enjoy Michael Lewis, and The Big Short was written in a time where I was in the middle of my career, and it was a really crazy environment with the 2007, 2008 great financial recession, the Great Recession. And it just is a great book about others that some contrarian views that, took the opposite approach, didn't run with the pack, and put it all in. And it was sort of like, I really enjoy sort of that entrepreneurial spirit. It reminds me of, small business owners who, mortgaged their house and all their credit cards to go all in on their idea and had success with it. Not in my DNA, but I appreciate the opportunity of reading about those that did. And, he's just a great author. Moneyball, Liar's Poker, all those. I think you can find something, if you're interested in finance and Wall Street, he's the authority on good reading there. Movie, I got to put up Wall Street. I'm sure you've had that as well, but Bud Fox and Gordon Gekko, it turned me on when that came out many years ago, and got me thinking, what is this whole Wall Street thing? What's going on in the shadows here? And what a cast, right? With the Charlie and Martin Sheen and Michael Douglas and all, and it's still really, I think, resonates in even today's environment. So it's those were two that I would, one author, one book, one movie that I'd throw out there.
I love it, Chad. And it's very interesting. You said Liar's Poker, and I find that very interesting because as as you and I both, as we get a little older here, I can remember about 20 years ago or so. That was the book, and Liar's Poker is an absolute classic. If anybody has not read that book, it's an absolute Wall Street classic. And that was the book that he was known for a long time, for probably about 15 years, 20 years. And it wasn't until, like, obviously now he's more known for The Big Short and Moneyball and all that. I would say, those have become very popular things. But yeah, it's very interesting. I always go back to The Liar's Poker, because that was just, I read that book many years ago, and it was just such a phenomenal book, and really was a great book at just kind of capturing the culture, the atmosphere of Wall Street at that, kind of 1980s, that particular point in time. And, so I love it that you mentioned that. And then Wall Street for me. So I was about, I would say I was probably 10 years old the first time I saw Wall Street. And this movie just, it just captured my imagination. Like, I had never, as a young kid, I had never seen a movie like that was about the business world. It showed a very like aggressive side to the business world. Like, hey man, we're movers and shakers, and we're out there, we're making money, and we're doing this. Now, granted, some of the themes in the movie are greed is good and all that, like whatever. But there was something about, like, I saw, like, when Charlie Sheen is in the stock trading room with all the stockbrokers on Wall Street, and just the kind of the energy, the atmosphere of that, like, just really captured my imagination as a kid. And I just said, wow, that's really interesting. And it was funny to me, because that ended up, my father was actually a trader on Wall Street for about 10 years. But he didn't really mention that or talk about that much when I was a little kid. It wasn't until I probably got into high school where I started asking him questions, and then all of a sudden it was like, oh yeah, oh well, hey, by the way, I used to do this for a living, and this and that, and it kind of like blew my mind, because I was like, oh wow, I was like, he never, because my dad was always, at least when I was a kid, my dad was in real estate and did a lot of development and things like that. But it was just so I kind of connected with my dad too through that movie in a very unintentional way. Like, it just kind of popped up, and then it was like, oh, that's kind of interesting. And then it was, one of those things where sometimes you get somebody talking about something, and then all of a sudden it, like, they open up to you in a way that you didn't, so it was cool. It was cool. It was a neat thing, but I love it. I'm so, like, happy that you mentioned that author and that movie, because they were great things, and were really things that connected with me as well. So
yeah, watch Wall Street for the entertainment value, not to model your career off it. You'll have a very short career if you aspire to be a Bud Fox or a Gordon Gekko.
Yes, absolutely. And and I'll leave you with, I'm trying to think, the guy, what was the actor's name? Hal Holmbrecht. And I was kind of surprised, because he actually just passed away just like maybe like a year or two ago. And he was the guy who was the kind of like the moral voice in the movie. He would, like, pop over to Charlie Sheen every once in a while, and he would say something prophetic to him. He has the whole line about looking in the abyss, and when a man looks in the abyss, and he has to come back. So it's like, it's kind of, it's kind of like that. Like, you want to, think like that guy. Don't think so much like Gordon Gekko.
Amen.
But hey, thank you so much for coming on today, Chad. I really, really appreciate it. I would definitely impress upon the audience. I have just a ton of respect for Chad. Chad has been around in our market for a long time. He's a super well-known, super well-respected guy. Everybody thinks very highly of him. When the local news media needs comments on what's going on in the banking business, they call Chad, and they're like, hey, what's going on? So I was just so appreciative that you came on to do this today. And I hope that if you got something either good that you'd like to share with us, or maybe there's some other news in the banking business someday, that you'll come back on and join us again.
Well, Joe, thanks for having me. This is a great product you put together for your audience, and we're happy to do that. Just give me a call.
Perfect. No, thank you so much. And again, thank you so much for, I should say, before I forget, if anybody would like to contact you, Chad, what would be the best way for them to do that?
Email's probably best, and it's CHULL at Janney, JANNEY.com.
Perfect. And there will be a link to Janney's website in the description below. If anybody wants to go on and if you want to, check out Janney or just see a little bit more information about the company. So, but thank you so much, Chad. And we definitely look forward to having you back again soon.
Great. Look forward to it. Thank you.
Thanks. All right, everybody. Well, that was Chad Hull, investment banker with Janney, and we're so incredibly excited about having him on today. I hope everybody really enjoyed this interview. And as always, if you liked the episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. If you have any comments, please leave them down below. I always enjoy getting back to everybody. And I will see everyone again real soon. Look for some other episodes coming out this weekend. And I hope everybody just has a great week. See you later.